I'm Devon Coombs, and welcome to Business Core Tutoring. Today we're going to be talking about a subject that a lot of students find challenging, but it doesn't have to be so. The difference between costs and expenses and revenues and income. It's really important that any business student and any accounting student really grasp this fundamental terminology, because without it you can't build your income statement, you can't build your financial statements, and you can't make your statement of cash flows. You also can't interpret financial statements. So I'm going to start off talking about the difference between costs and expenses, and then I'm going to move into talking about revenues, revenue recognition, and net income. Let's start with costs. A cost is an amount paid or required for a purchase. Cost is also synonymous and equivalent to the word expenditures. Costs and expenditures assume that you are sacrificing cash or a cash equivalent in order to gain an asset, an item, or a service. So a lot of people get confused about what a cost is. It really has to do with sacrificing cash in exchange for something else. If you have not sacrificed cash, you have not incurred a cost. So let's use an example. Let's say I own a coffee shop. Anytime I pay my employees, I pay for inventory, the coffee beans, or I pay my rent, I have incurred a cost. For expenses, cash doesn't necessarily have to be instantly sacrificed. Expenses are only incurred when they produce revenues. If it doesn't produce a revenue for your business, then it can't be considered an expense. So let's use my coffee shop as an example. Most businesses have to pay their employees every 2 weeks, but those employees help generate revenue on a daily basis. I have a daily expense for my employees, even though I only incur a cost every 2 weeks. Revenues can be defined as fees earned or sales of merchandise. If you hear the word sales, or you see the word sales on an income statement, it does mean revenue. It's synonymous with revenue. The important word here is earned. For something to be earned, it has to have a reasonable reliance to be expected to be received. Let's use an example. Let's say you're coming to me for tutoring, and you pay me $1,000 for a whole semester of tutoring. I can't recognize that $1,000 instantly, because I haven't provided the service of tutoring for you yet. Expenses are only recognized when they produce a revenue, and then revenues only are recognized when they have a reasonable reliance of being earned. So now let's talk about income. Income is simply equal to revenues minus expenses. So let's say you have $100 in revenue and $50 in expenses, you have $50 in net income. If you have $50 in revenues and $100 in expenses, you have a $50 loss. A negative net income is also known as a loss. As long as you understand this terminology, you're really going to perpetuate and excel your business knowledge. Well, thank you for watching this video. Today we discussed the difference between costs, expenses, revenues, and net income. The next video we'll be discussing the difference between assets, liabilities, and shareholders' equity. A special thanks to Zohara Hiasef for helping film this video, and we'll see you next time.